Hi, thanks for watching this snapshot video. We've just had some quite potentially game-changing economic data from the UK. Inflation is up 2.7% year over year. Looking at the core price, excluding food and energy, is 2.9%, so nearly 3% when you look at the actual headline CPI data. So consumer prices going up by nearly 3% a year. Yet we still have interest rates at just 0.25%. And obviously this is particularly important because we have a Bank of England meeting this week, and the expectation is that again they won't raise rates even to 0.5%, which is historically obviously very low when we're talking about interest rates. So the result of this has been that the market's really been calling the Bank of England's bluff, and the pound has risen to its highest in a year. Against the dollar. It's still looking very soft against the euro. The dollar has had its own set of weakness, with this relative strength in prices coming from the UK pushing pound against the dollar higher. And this is one of those big areas of resistance for the pound. There's a chance that it falls back, but it's looking increasingly like the pound's opening up into a new uptrend. So here I've just pulled up, there you can see core prices 2.7% on the LCG economic calendar on the LCG website. If I minimize that, now we have the cable chart in front of us. This is the weekly candlestick chart. We've already previously mentioned in the week-ahead video, etc., the week-ahead report, that we've bounced off this rising trend line connecting these lows. So we put in that higher low, and now as we speak, we're making the effort to put in the higher high. So 133 and change, 132 and change, more like 133, is really the key area of resistance that we're testing at the moment. But looking at this long-term chart, you can see that just above us we have these two highs that were made in sort of summer and autumn of last year. And that also corresponds with a 50% pullback of the big Brexit-related decline. Hard to pinpoint the exact low, because that was the flash crash low, but you can see it does actually come, whether you maybe even use a more conservative measure of this low, it's still in and around that vicinity, around that 134.50, 135 mark. That seems like a natural magnet for prices to attract to, should we get the breakout that's currently being attempted. So here's the daily chart. You can see we had a massive move last week, around 250 pips gains last week. A little pullback at the start on Monday from last week's high, but now, as you can see with this UK economic data, we're breaking to the top side. Short term, those highs from August are the resistance, and we may get a little pullback from around there because obviously we do have that Bank of England meeting, but it's looking like we're breaking to new higher prices here. So that's it for today's snapshot video. Of course, we're covering that UK inflation data, which came in ahead of expectations. It's 2.9% inflation now in the UK, really the kind of inflation that needs to be curbed, justifies a rate hike, yet at the Bank of England meeting on Thursday, there isn't any rate hike expected. So what the Bank of England do is probably going to be the critical point for whether we hold the current highs, that one-year high we've just hit in the pound against the dollar, or whether we can actually push on to those high prices mentioned. Now, if you did enjoy this video, please follow LCG on social media, including Twitter, Facebook and YouTube.